Hello, hello. Welcome to part three of our three-part webinar series for Santiment this week. We're excited to conclude our tutorials by talking all about valuation metrics. These would be metrics that are essentially measuring how to value crypto assets based on market cap. They tend to be more long-term types of valuations and divergences that you can use to value whether the current market cap of your favorite assets are looking bullish or bearish or right on par. And we can use these to really give a nice snapshot of the markets and understand where things may be going over the next few months, right? Whether Bitcoin at its current level in the low to mid 50,000s is accurate, or whether market cap is higher than it should be, lower than it should be, and whether price may surge or start to dump, right? And that's why these types of metrics are extremely important. As always, as I mentioned on the last two calls, we want to make it very clear that the models and any metrics and charts that we share are intended for educational purposes. We're going to do our best to objectively show how they can be used, but by no means are we intending to give price predictions or even really gauge where the market is like we typically do tomorrow and every Friday on our This Week in Crypto calls. So this is all about education, is up on how to use these types of valuation metrics most effectively. Now, I'm starting off here by just showing our Santiment Academy page for the three main metrics that we'll be covering here today. NVT is defined as daily market cap divided by daily circulation. In our case, we do also have a daily transaction volume version, but for the most part, we tend to like this type of calculation a little bit more as it reliably cancels out things like wash trading. Oh, I'm hearing a little beep. Is everything okay on Skype?
Sounds good to me.
Okay, just had a really weird sound there all of a sudden.
It
so
does
yeah, anyways.
seem like you are, the camera is no longer shown on stream, but I can hear you. Okay, we're back, it seems.
Okay, perfect. Glad we checked. So daily market cap divided by daily circulation is the slightly more accurate way we like to look at things. For those of you who are coming from like a traditional stock background, this is kind of the equivalent of the PE or price to earnings ratio, which is a way of effectively valuing a stock, right? An actual company based on the amount of earnings that it's bringing in at any time and comparing that to its current price to see whether it's overvalued or undervalued where it currently sits in market price. NVT is used the exact same way, or at least the most equivalent way we can in crypto, by taking the market cap at any given time and comparing that to how much actual circulation or unique tokens moving from one address to another are happening at any given time. In general, for all three of these metrics, we can kind of effectively gauge that the more usage and utility that's happening within an asset and on the network at any given time, the better it is for the asset long term. We want to see utility. We want to see more and more addresses not only existing on the network, but actually using it, right? And if we have that going on, generally good things happen, and we have the kind of bull market that we've really experienced over the last year. Of course, there are exceptions to it, and we kind of look for things within the weeds to give us a glimpse into the future through these metrics to find divergences like I mentioned a couple minutes ago. So that's NVT. Moving on to MVRV, or the long version known as market value to realized value.
This is Brian. I was planning on just starting with the entire formula and definition of MVRV.
Sure.
Don't need to. I think it's probably redundant for both of us to cover it.
I hear you. Yeah. So long story short, we're going to be hitting on NVT, MVRV, and network profit loss on this call. I can hand it off to you now, Dino, and then I'll jump back in, 20 minutes out, and we'll sort of hand off from there.
Sure. Yeah, thanks. Just because we don't want to spend too much time talking about the same things. So Brian's going to be jumping in after the portion about MVRV. He's going to be jumping back in to talk to you guys about NVT. But first, we're going to be talking about the MVRV ratio. I don't know how often you guys watch our weekly calls. I hope it's every Friday, which is the only correct answer. But if you do, you know that we value MVRV very highly when we talk about the current state of the market, the current state of particular coins, and so forth. MVRV ratio is one of, I think, the most popular on-chain metrics right now on the market. As far as at least my Twitter timeline is concerned, this is the, like, outside of obvious like movements of coins to and from exchanges, this is the metric that I see the most often being talked about. So let's start with the general overview. What is MVRV and how should you use it? MVRV has been developed in 2018, I believe. It's the first time that it was introduced. And the general sort of formula is fairly simple. So what MVRV tries to do is it tries to show the difference between the coin's market cap or market value and the coin's realized cap or realized value. And that's why it's called MVRV. It stands for market value to realized value ratio. So the idea behind the metric, in a sense, is to try to calculate or visualize the average profit or loss of all addresses that have acquired an asset within a certain time frame. So let's go over the formula for MVRV and in general what you can kind of deduce from it. So the basic formula or the basic methodology for calculating the MVRV, like I said, is dividing the coin's market cap, which is essentially the total supply of the coin times its current price, and dividing that by the coin's realized cap or realized capitalization. Now, like I mentioned here, and Max, if you want to share this insight with the chat so they can look at that in more detail, it's one of our recent weekly pro reports as well. In general, realized capitalization is an on-chain indicator or an on-chain metric that values each unit of, let's say, Bitcoin or any coin by the price at which it was last moved on the blockchain, right? So what you get when you combine these two metrics, market cap and realized cap, is you get market cap, which is the coin supply, the total supply of the coin times the current price of each coin. That's how you get market cap, right? You get the total non-diluted supply of the coin, and then you multiply it by the current price of each coin. And then you divide it by the realized cap, which is the total supply of the coin multiplied by the price at which each unit of that coin was last transacted on the blockchain. So the way that you can kind of use it is essentially, or the way that you can think about realized cap is essentially as like the total acquisition cost of a particular coin, right? So you divide the total amount of value, or the total amount of the value for a specific coin. You divide it by the total amount of money essentially that has been spent to acquire that coin. And what you get is the difference between the market cap and the realized cap. And as a result, you get a number like plus 206% or minus 15%. All that number means in general is that the average profit or the average loss of a certain group of holders is that number. So essentially, for example, if we're looking here at the MVRV ratio for Ethereum, and we can see that at this point in time when I was writing about it, the MVRV ratio for Ethereum was plus 206%. So what this means is that all Ethereum addresses on average at this point in time were up plus 206% on their initial investment, or on the plus 206% compared to the amount of money that they spent to acquire these coins in the first place. Right now, keep in mind, obviously, that MVRV assumes that all of the transactions on the network are speculative in nature. So every time that the coin moves, MVRV assumes that it was a purchase. So that's why sometimes these average profits or loss are going to be fairly skewed, but the general trend remains, or the general trend stays the same. So what you want to actually, the way to understand MVRV, I think in the simplest form, is to simply look at the number here and understand that means that if it's a positive number, it means that on average, these holders are in profit by, this amount of percent. And then on average, if it's a negative number, that means that all holders are on average minus X% on their initial investment, right? So outside of the general MVRV, which is calculated for all coins on the blockchain since the start of the network, at Santiment, we also have these time-bound MVRVs, which I honestly think that they probably hold more alpha when it comes to figuring out short-term cycles and short-term price action. So what do I mean by time-bound MVRV ratio? So outside of calculating the MVRV ratio for the entirety or the entire time of the entire lifespan of the network, at Sentiment we have also introduced MVRV for a specific time frame, like for example the 30-day MVRV, which you can see here, which calculates the average profit or the average loss of all addresses that have acquired, in this case, Bitcoin within the previous 30 days. So rather than looking at the entire lifespan of Bitcoin and all addresses, the profit of all addresses across time since the beginning of the network, here we are looking at the average profit or loss of all addresses that have acquired Bitcoin in the previous month alone. So in this case, we can actually check out or gauge the average profit or loss of short-term Bitcoin traders. And then on the other hand, by looking at something like the 365-day MVRV ratio, which we can look at here, we can look at the average profit or loss of the longer term Bitcoin or certain coin holders. So for example, as I'm speaking, the 365-day MVRV for Bitcoin is plus 52.5%. What that means is simply that on average, the profit of all addresses that have acquired Bitcoin in the previous 365 days is about plus 52%. So they're about half they're about plus 50% on their initial investment, right? So with that being out of the way as far as how MVRV is calculated and what MVRV is supposed to represent, the next sort of logical question is, how do you actually use MVRV? Or, how do you use it to spot whether a coin is overvalued or undervalued? And it's fairly simple. The way that most on-chain analysts use MVRV is that the higher the MVRV gets, like for example here, right? The higher the MVRV gets, the more unrealized profits there are by this particular subset of holders. In this case, we're looking at all the Bitcoin holders that are holding at least, that have acquired Bitcoin in the past 365 days. So the higher the MVRV, the more likely it is that people or these holders are going to start claiming some of these profits, and as a result impose adverse impact on the price or generally exert increased sell side pressure. So the higher the MVRV, the more incentive there is for people to start acting more risk off, taking some profits off the table, and as a result applying massive sell side pressure and possibly tanking the price in the short term. And then on the other hand, the lower the MVRV, especially when it goes into negative, it means that the holders are on average not even up on their initial investment, meaning they're below break even on their initial investment. And the lower the MVRV gets, the more likely it is that we are going to see a short-term price recovery, simply because, according to MVRV at least, the lower the MVRV gets, the more undervalued a coin is compared to its market cap. Because if, for example, let's take a look at 30-day MVRV for Bitcoin. So for example, here on April 23rd, we were about minus 16% in terms of Bitcoin's 30-day MVRV. So what that essentially means is that the total amount of money that was, the total amount of funds that was, or value that was spent to acquire all Bitcoin in the previous 30 days was more than the total market cap of that coin, Bitcoin in this particular case. So that means that the current market cap is lower than the total amount of money that was used to purchase this particular asset, which assumes that by that equation, the coin is currently undervalued or oversold, right? So as a result, like I said, the lower the MVRV, the more undervalued the coin, the higher the MVRV, the more overvalued the coin, at least according to MVRV. Now, while that's all well and good, the question is, how high is high and how low is low, right? In other words, is a high MVRV something like plus 20%, or is it something like plus 30%, right? And for this reason, it's MVRV is best used in terms or with coins that have a wide history or large history of data so that you can compare previous peaks and valleys for a specific MVRV ratio. Like, for example, if we look at Bitcoin, since we're already looking at it, and if we look at the last 2 years of data, and actually we can move a bit more. Oh, sorry. No, not since the 09, since the 18. There we go. Okay, what we're going to see now is we're going to see the 30-day MVRV for Bitcoin over the last, what is this, like 2.5 years, right? So essentially what we can see is that very often as Bitcoin sort of crosses this level of about plus 18 to 20%, it tends to move into a fairly unsustainable territory. So first of all, we have only seen a couple of days in the past 2 years, 2.5 years, that Bitcoin's 30-day MVRV was able to sustain levels of plus 25% and higher. So that already tells you that once we are at these points in time, historically speaking, Bitcoin's MVRV has shown a tendency to normalize, and as a result, the price has also shown a tendency to correct itself. So based on historical data, based on the last 2.5 years, we can kind of see that levels of above plus 20% are usually fairly concerning for Bitcoin's short-term holders, because essentially what they seem to signal or indicate is that at profit margins of about plus 20%, short-term holders begin to take some profits, or take some profits off the table. So as a result, once we see Bitcoin's 30-day MVRV rise to that plus 20% level or higher, it essentially means that previously we have seen people start to claim some of their profits at these levels or at these profit margins. So if history is to repeat itself, especially if this subset of holders is feeling fairly bearish about the market, then we might see another sort of round of sell-offs. And then vice versa, if you look at Bitcoin's 30-day MVRV ratio, some of these are obviously clear outliers, like for example the coronavirus dump. So for example, when you look at coronavirus dump, you're going to see for most coins this massive drop in its MVRV. So consider that as a black swan event. But in general, and I've talked about this, I wrote about this here, is that when you look at Bitcoin's 30-day MVRV ratio, overall it has shown a tendency to not spend a whole lot of time below minus 15%. And actually minus 15%, if we draw a line here, has been a fairly consistent sort of support level for Bitcoin's 30-day MVRV over the last 2.5 years. So I was when I was writing about it here, I think it was two weeks ago, I was writing a weekly report. I actually mentioned, maybe we can even find the report. I mentioned that Bitcoin's 30-day MVRV is very low historically speaking, and it's going to be very interesting whether it's going to bounce back off of this previously established support level, and so it did. So in general, though, the idea behind MVRV is high equals overvalued, low equals undervalued, and then you look at historical trends and figure out what were previous sort of opportunity and danger zones for the coin. And based on that, you kind of evaluate where we are in the cycle, right? So with that being out of the way, I also wanted to mention that we've ran some backtests, and not just backtests on this metric. We've also tried to develop real-time models around using MVRV as the backbone. So what we tried to do in this particular study that we've published, what is this, like a month and a half ago, is we tried to build a real-time price model using MVRV. So we tried to eliminate any hindsight bias and develop a model that would be able to trigger buy or sell signals in real time using MVRV. And we wanted to see what that model would perform like, whether it would be able to perform better than if you were just holding that same asset, right? So here's what we got. And I'm going to show you the results. First of all, let's talk about the methodology behind the results. Essentially, the way that we developed this real-time model is we looked at the MVRV ratio over the entire history of the coin. So let's look at, for example, this is the, let's assume that this is the entire history of the 30-day MVRV for Bitcoin. And we segmented this history into 30-day chunks. And then in each 30-day chunk, we looked for local peaks or bottoms for MVRV. So for example, this would be one 30-day chunk, this would be another 30-day chunk. And then in each of those, we looked at local peaks and valleys or bottoms for the MVRV ratio, right? For the purpose of this model, we defined local peaks or bottoms as any uptrend or downtrend, which is higher than or lower than 1.8 standard deviations from the mean, from the historical mean. Essentially, what that means is that we're just, in each 30-day sort of neighborhood, local neighborhood, we were looking at massive outliers in each direction. And then once we collected all of these outliers in each direction, both up and down, then we calculated the median value of all these local MVRV tops and bottoms. So let's, for example, assume that, based on this last 2.5 years of data, we realized that, we took all of these local peaks for MVRV. Let's say this was at about plus 13%, this was at about plus 16%, this was at about plus 21%, this was at about plus 40%, so forth. So we take all of these and we calculate the median value of all those MVRV peaks. And let's say the median value was around 20%. So we took that 20% for this particular coin as the sort of trigger for our real-time signal, so that the next time Bitcoin's 30-day MVRV hits that 20% based on historical data, right? The next time that Bitcoin's MVRV hits that 20%, we trigger a sell signal. And then on the other hand, we did the same thing for MVRV bottom. So we took the median value of all of these historical outliers or bottoms in terms of its 30-day MVRV, and we found a particular number, which is the median value for MVRV bottoms. And then anytime that Bitcoin's MVRV hits below or hits that MVRV bottom, we trigger a buy signal because, assuming that this is the opportunity zone for BTC. So that's essentially how the methodology works. I just kind of wanted to explain or visualize exactly how we came to a conclusion or how we built this real-time model. So essentially, we were just looking at historical data. We found we calculated the median values of all of the tops and bottoms for a particular coin in the past. And then we used that to feed our real-time model with buy and sell signals. So with that out of the way, these are some early results. We've performed 3 backtests or sort of developed 3 real-time models for MVRV. We used 30-day MVRV ratio, we used 180-day MVRV ratio, and we used 365-day MVRV ratio, basically short-term, mid-term, and long-term holders for particular coins. So here we are looking at, and I'm gonna change to light mode so that you can look at it a bit clearer. Here what we're looking at are the predictive model of ours, so the real-time signals that our model was able to issue for Bitcoin in particular using the 30-day MVRV ratio. So these sell opportunities or sell signals were triggered here, 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 and here. And then on the other hand, the buy opportunities were triggered here, 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 generally around several sort of bottoms. So as you can see, although the model is not perfect, like for example, especially in the past couple of months, the MVRV, the signals have started to trigger even sooner, relatively sooner than the actual top, compared to like these signals here, which were right on point. In general, there definitely seems to be some alpha in figuring out, all right, are we over or undervalued according to Bitcoin's or particular coins MVRV. This is the Ethereum's 30-day MVRV and the real-time signals that we built using Ethereum's historical data for 30-day MVRV. So our sell signals would have triggered here, 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 and here, and then once 3 more sell signals right at the respective Ethereum tops, another cluster of signals here, and then a big signal here, and then a few smaller signals along the way. And then on the other hand, the opportunity signals would be here, and then around a few local bottoms for Ethereum. So you can also spot that these signals are not perfect, and these were just the sort of initial results. Like for example, especially in case of Bitcoin, you can see that we would actually trigger a buy signal here, even though we had another sort of leg down. So keep that in mind that sometimes, based on historical data, we were already undervalued here. right? But we had another sort of leg down before, like you would still be in profit if you bought here a month later, right? But keep in mind that sometimes, MVRV ratio can fall down even lower, and the lower it gets, the more opportunity there is possibly for you to accumulate. And then I think we have a few other sort of coins that we looked into. This is KNC. The 30-day sell signals, the sell signals based on the 30-day MVRV ratio were here, top, closer to the top, but obviously, it triggered at the very top, but even before that, it also triggered. We had this whole sort of cycle or ranging pattern being super overvalued, obviously coincided with this with the massive drop-off, and then a few other sort of very on-point sell signals. We didn't get a whole lot of buy signals. We did get a few of them here at this massive correction, suggesting that according to historical data, KNC's 30-day MVRV was very undervalued, or suggested that the coin was very undervalued at this point in time. And then you have a few other sort of examples here, and in general, this is the first sort of backtest that we've done, or the first real-time model that we've developed using MVRV that seems to suggest that there's definitely some credibility to the way that a lot of on-chain analysts use MVRV as a sort of bottom and top indicator, respectively. We've also looked at the 180-day MVRV for Bitcoin, but so far it didn't really prove all that successful. So that's why I think sometimes 30-day MVRV is sort of, at least as far as real-time signals, I think 30-day MVRV and 365-day MVRVs respectively can be very interesting to look at. Like, for example, the 180-day MVRV, you can kind of see that, sell signals were all over the place. Buy signals were very good. Buy signals were, I think, even more common or frequent than with the 30-day MVRV ratio. However, in general, our model, or using the 180-day MVRV, our model just ignored this entire cycle as saying this is already too overvalued, right? So moving back to a few examples of spotting MVRV tops and bottoms, or spotting price tops and bottoms with MVRV. So we looked at Bitcoin. Let's look at Ethereum, just using the 30-day MVRV now. So I think this is also, and I actually wrote about this yesterday. When did I write? Oh, we write a lot about Ethereum, but I mean, you can find it right here. If you go to Insights, I wrote about it 15 hours ago. I talked about Ethereum's 30-day MVRV ratio and 365-day MVRV ratio. So over the last 2.5 years, this is Ethereum's MVRV, 30-day. Essentially, the average profit of all addresses that have acquired Ethereum in the previous 30 days. So at the moment, we're at about plus 31%, suggesting that, on average, short-term Ethereum holders are about a third up on their initial investment. When you look at the history of Ethereum in the past 2.5 years, you can kind of see that any levels above, like, let's say, okay, what is this? This is 22. Any levels that I would say about 25% and above usually don't last very long. In general, sort of they seem to point to a need for normalization. They also point to profits sort of hodling or being hoarded by holders, and therefore a lot of profits sort of sitting on the table ready to be taken. And as the sort of market turns on a coin, becomes more bearish, these holders start taking some of these profits and applying sell-side pressure on the coin itself. So as you can see, over the last 2.5 years, even with this massive outlier, it's only lasted for 4 or 5 days, I believe, before we had to correct in order for Ethereum's 30-day MVRV to normalize. And then on the other hand, we have also seen this sort of level of minus 15%, similar to Bitcoin. Now, this is the MVRV for different coins is always going to be different. So it's not like if minus 15% is an established support zone for Bitcoin, it's going to be an established support zone for all of the coins. It absolutely doesn't need to mean that. But overall, like when we approach these levels, we very rarely stay at these levels for more than a week or so. Even, these, once again, we had this massive outlier in during the coronavirus dump, which suggested that we were not just for Bitcoin, but Ethereum and pretty much the entire market, we were massively undervalued according to the MVRV. And then here in early March or late February, when we hovered at these sort of levels, it suggested to us that Ethereum's bounce back is a possibility because its short-term MVRV at least has been very, very low. Okay, now I also want to look at so 30-day MVRV. I think is a good good gauge of like short-term holder sentiment, or generally of how much in profit short-term holders are, and as a result, how much potential sell-side pressure they can exert on the price of the coin. However, it's also very important, I think, to look at the long-term MVRV or the profit margins of long-term MVRV or of longer-term holders. So first of all, let me look at the entire history of Ethereum, just to kind of say that over time, we have seen this happen with most coins. And that's why I generally avoid sort of evaluating the MVRV across the entire spectrum or the lifespan of the coin, because both for Bitcoin, Ethereum, and a lot of different coins, we have seen the MVRV peaks flatten out with each subsequent bull cycle. Sometimes they remain the same, but very often they are going to sort of decrease over time. The reason, at least in my opinion, why this is that with each subsequent market cycle, I think in general the crypto market becomes just a tiny bit more mature. Holders become a little bit more risk off compared to previous bull cycles. They stop expecting the same returns that they expected in 2017, for example, and as a result, we see them begin to take profits sooner relative to previous bull cycles. So that's why I usually sort of, let's zoom into the last 2.5 years. And what we can see here is that, once again, Ethereum's 365-day MVRV is currently fairly or significantly high. So it's already at about a 3-year high at plus 148%. And it's sort of at the same level that we saw it in early January before we had this sort of minor correction in order for Ethereum's price and MVRV ratio to normalize. Now, obviously, this doesn't have to mean that Ethereum is going to immediately correct or that this is the end for Ethereum's rally overall. It does, however, signal that, at least according to MVRV, Ethereum is showing some overvalued signs, and in general is showing that it's both long-term and short-term holders are currently quite a bit on profit and could begin realizing those profits, and as a result applying negative or downward price pressure. But on the other hand, I think when we're looking at Bitcoin, when we were looking at Bitcoin, like, it took a while. If you sort of, so for example, Bitcoin's 365-day MVRV sort of shows the same pattern. Both in 2019 and in 2021, we kind of peaked at around the same level. So this was about plus 104%, I believe. And here we were at as high as plus 115%. This was exactly plus 104% where we peaked, suggesting that we are sort of, both in terms of short-term and long-term holders, we were reaching these sort of danger zones, right? But like, if you looked at if you were looking at the entirety of 2020, even here we were already fairly high, right? We were basically the MVRV was higher than at any point during the 2020 rally. So that's why I really think it's important to look at full historical trends, or at least like longer historical trends, in order to figure out exactly how overvalued or undervalued we really are according to this metric, right? So a few more examples on 365-day MVRV. I liked Litecoin. Litecoin's 365-day MVRV, because it also sort of paints a very similar picture. So 2019, we peaked at about plus between 100 and 120%. I think at one point we hit 120%, but here we were already at about plus 100. So here we were at plus 95%. Here we were at plus 107%, and then most recently we were at about plus 90%. But overall, you can definitely kind of see that Litecoin's 365-day MVRV was already reaching the peak 2019 levels, suggesting that according to at least some historical trends, Litecoin might be due for a short-term correction or short-term normalization of its MVRV, right? And then if we look at its 30-day MVRV, and we can zoom in a bit. Yeah, I think this is good. So this is the 30-day MVRV for Litecoin. Pretty much the same story that we've seen with Ethereum, right? Any sort of point above plus 20, what is this? Plus 20 to 25% is usually not sustainable for very long. And actually, you can see that Litecoin's MVRV has already, sort of dropped over the past couple of days, suggesting that there's simply a need for normalization before a potential for another, a price uptick. So overall, this is sort of the way to use MVRV in a vacuum. When it's high, it suggests that the market is overvalued, or it suggests that the total, that the market cap is too high compared to the amount of money that has been spent to acquire the coin. And then on the other hand, when the MVRV is very low, it suggests undervalued conditions, and then simply move through the entire history of the coin and figure out what have been particular opportunity or danger zones in the past. And using that, you can kind of get a general sense of where we are in a sort of mini cycle for a particular coin, right? It doesn't, once again, need to necessarily mean that as you hit these levels, we're immediately going to correct, but it does sort of give you a good idea of historically where we are. Okay, so with that being out of the way, I think, Brian, we can move slowly into NVT so that we can have time to cover both NVT and network profit loss. So guys, if you have any questions about MVRV, let me know in chat and we can revisit them after the NVT portion. But Brian, if you want to share your screen, I can log off.
Sounds good. Sharing now. All right. This showing up okay?
Yeah, I can see it.
Perfecto. So this is our NVT Sandsheets model. Everyone who has Sandbase Pro has the ability to check this out anytime, any day, and see exactly how the market cap versus token circulation is looking at any given time. The colors are basically on 5 different levels. They're pretty intuitive. Red, as you would expect, would be bearish. Green, especially bright green here, would be bullish. And then you've got semi-bullish here in yellow-green, neutral here in yellow, and semi-bearish here in orange. Basically, these trend lines here are just time frame fluctuations, basically like a 6 month 6 month, 11 month, 16 month, and then an all-time line here. It looks like it's going to try to refresh, so it may go away for just a moment. But long story short, when you are seeing a significant amount of token circulation on that given network, you're generally going to be seeing green bullish bars. And it has kind of a leading property to it where when those green bars pop up, the following month has a very strong chance of being a rise in price, and vice versa. When it's red, the following month has a very good chance of dropping in price. It'll come back here in a moment, but long story short, with Bitcoin right now, we've actually been seeing a little bit of stagnancy for the last couple months, which is understandable when you have the kind of rapid market cap growth that we had. There's eventually going to be a point where token circulation just can't sustain exponentially, rising levels at the same capacity that price does. When that happens, the price generally starts to taper off. Now, obviously, last month, about 3 to 4 weeks ago, that's when we hit our 64K all-time high. But it doesn't necessarily mean that token circulation was following all the way up to 64,000. And we'll see here when it refreshes that there was actually a drop off about a month before. And even though we had a rise in April compared to March, as you can see now, the red bearish bar actually started occurring in March. and the close price between the end of March and the end of April actually indicated correctly that there would be a drop off, even though the high here indicated in green rose, right? So it's all about kind of that 30-day leading property, which is why, as I said at the beginning of the call, this is kind of a long-term indicator rather than a more shorter midterm one, because of the fact that there's kind of that delay between what's going to happen in the current month and what's occurring in the next month. The following month here in April was also showing as bearish, and even though the low has been higher, this midline here, which is the last day of April compared to the current day of May, is showing that we're actually getting a correct drop off. So far, it's a small sample size, right? We're 5 full days in. Today is the 6th day of May. So we have 5 days of NVT data to show that it's actually extremely bearish right now, but it could quickly turn around in the next 5 to 7 days if we start to see more hash marks down here. This 1 day mark shows that it's actually below at least 2 of the 4 trend lines. I know it's hard to see, but there are 4 total trend lines in different colors, and the last 2 days have been below the trend lines, which is a good thing. That means it's starting to get a little more neutral again. But we'd need to see that the average starts to come down to here or even closer to here to be neutral or semi-bullish. If it was actually below this blue line, it would be super bullish. But theoretically, this model holds up pretty well. As you can see, April to June in 2019, big surge, followed by this long stretch of red. And subsequently, we had that big drop in Bitcoin, going way back to 2017 when we had that first, or not first, but like the really big bull run that got a lot of the mainstream into Bitcoin in the first place. That happened from May to about August when prices started to soar. And then it eventually, in February 2018, had that drop off. So we look to this kind of model as a great indication for whether the amount of unique transactions happening, or tokens, I should say, are keeping up with the current market cap. So this is Bitcoin. I'll also show you how Ethereum's looking right now. And keep in mind, this changes really rapidly. So 2 weeks from now, it may look completely different. And it's really important if you've got Sandbase Pro to check in, every few days and see if things are starting to look neutral or bearish. But right now, Ethereum is actually looking quite good. And it has looked good for a very long time, as you may expect for an asset that's gone from, a close of $208 in April 2020, right after the huge Black Thursday event that was COVID related, all the way up to almost 3,600 as of today, when it hit another all-time high of like 35.96, I believe, or 35.94. So essentially, this model has correctly predicted that the Ethereum network was getting an excess, and excess should be taken with a grain of salt because excess is a good thing in this case, but it's gotten more than enough token circulation needed to allow the price and market cap of Ethereum to surge, and it's very much done so. We did start to see a little bit of a neutral signal, not quite neutral, but like at least semi-bullish rather than ultra bullish in March, but then April recovered quickly, and it's now back in semi-bullish territory for the first 5 days of May. You can see here, though, the last 3 days, 1 day, 2 day, and 3 day in very dark gray there. These were all very good token circulation days. So if today ends up also being in this range, this will probably shift back to super bullish again. Either way, though, if you're comfortably in green or yellow-green, that's generally a sign that you're in a good spot with the asset, and there's at least a major decreased likelihood of a huge price correction. Now, keep in mind, everything that is not Bitcoin is going to be connected to Bitcoin to an extent. So even Ethereum as the number 2 asset is going to suffer if Bitcoin keeps up this bearish divergence here, and the price may eventually drop down given enough span of time. So even with Ethereum looking bullish now, there's going to be some bumps in the road if Bitcoin can't sustain itself above 50,000, for example. There's plenty of support levels that you technical traders know better than we do as we focus on fundamentals for the on-chain and social side. But overall, this model is a tremendous help for giving kind of a zoomed out look at how healthy Bitcoin, Ethereum, and any other assets look at any given time. We've got, Chainlink here, we've got XRP, and if you ever want to switch to an asset of your choice, you can actually just go over here to where it says date and type in the ticker slug of your choice, put in the start date, going back to whenever that asset began to publicly trade, and you will instantly get new data compiling to give you a snapshot into how their health network is looking. So this model has just a few, but you can switch to whatever you want to curate it to your own trading strategies. So that's NVT.
So essentially, Brian, just to kind of reiterate for people, essentially what this model does is it tries to visualize what is the relationship between the amount of value being transacted on the network compared to the market value, or compared to the total market capitalization of the coin. And then because, for example, Bitcoin and Ethereum, they don't really have earnings reports, so there's no way for you to make a perfect price to earnings ratio similar to what you can do in traditional financial systems. However, what you can do instead is you can assume, instead of an earnings report, you can simply look at the total daily amount of value being transacted on a particular network and take that as a surrogate, right, for the methodology. So essentially, if the amount of value being transacted on the blockchain on a given day is high enough compared to its market cap, then the model is bullish. And then on the other hand, if the total amount of value that is being transacted on the network is low compared to its market cap, then the model is bearish, simply because there's not enough demand and there's not enough value being transacted on the network to justify or warrant the total market cap of the coin, right?
Exactly. Yeah, and just like the PE ratio, as Dino eloquently put it, lower is better, right? Because you want to have the ratio between market cap and circulation closing. And when there is a closer gap between circulation and overall market cap in terms of the mathematical numbers, that's theoretically going to give you a lower number. So the tighter that gap is, the better. And that's why you see the low bars being green, high bars being red. It takes a little bit of getting used to, but the trend lines do the work for you. And the 5-color display here kind of gives you an easy snapshot to understand anytime you log in and want to check out the health of the networks. I can also show the MVRV model really quickly if now's a good time, Dino. What do you think?
Sure. I think we should, start with the net profit loss in about 2 to 3 minutes. So if you want to share, so
super
basically, like Brian is going to show you now, outside of what I already talked about for MVRV, we also have a few specialized models within Sandsheets, our plugin for importing sentiment data into Google Spreadsheets, which sort of try to help you visualize the MVRV of a bunch of different coins at the same time. So instead of only looking at Ethereum and looking at Bitcoin, these types of models can help you figure out which coins on average are currently over or undervalued based on their MVRVs. So go ahead, Brian.
Yep, perfect. So I want to start this by saying that some of our altcoins here need some work done on their formulas. So cancel, any of these big green bars out. Most are actually realistically in the semi-overbought or overbought territory. But for the purposes of just a really quick synopsis of how this works, we're going to look at only Bitcoin here and Ethereum here. You see Bitcoin showing a negative 0.32. That means that it has about a negative 32% divergence, with 0 being neutral, plus 100% being an opportunity zone, as in one of the best prime spots to buy in based on MVRV, and negative 100% being one of the worst spots to buy in based on MVRV. Now, this model is very long-term, even more so than NVT, and you'll notice if you've been tracking this model with us already for a while with Sandbase Pro, Bitcoin and Ethereum have been in the orange and red territories for quite some time as the prices have risen. But over a year, you would see that it generally flattens out very quickly. And the way it calculates is it'll look at the 1 day, 7 day, 30 day, 90 day, 6 month, and 1 year divergences, blends them all together into an average, and then compares how far off it is from its normal 0% range. When MVRVs are really high, which Dino explained is actually not so great, it means that average traders have already profited a lot within that asset, and there's an increased risk of it going down, so that those average trader returns can neutralize and get back to around 0% where every time frame rests. So when it's really high, like all 6 of these time frames have been for Ethereum, for example, that's when you'll see it in uber overbought territory. It doesn't mean that the price is immediately going to correct, but it means that eventually either the price will drop or average traders will start to FOMO in too rapidly and at least get caught enough to neutralize what the average trader returns are. So it can happen either through just a direct price drop or through trader, returns, being the decisions being non-optimal in order to cause average trader returns to get back to 0% instead of plus 50% or 60% as we've seen over the last 2 weeks. Same with Bitcoin. We're in semi-overbought territory. Obviously, in the 1 day divergence, the price has actually dropped a little, which is why this is the only good opportunity out of the 6 timeframes. But the 7, 30, 90, 6 month, and 1 year are all in risk territory because of the fact that those timeframes have all increased in price overall. So long story short, this just blends all the MVRV times together and gives you an output to tell you what the risk versus opportunity looks like at any given moment. So that's it on the model, and I'll send it back to you now, Dino, to wrap things up. You're muted, by the way.
Oh, right. I just realized. Thank you. Okay, let's move into the last sort of section that we had planned for today, which is network realized profit or loss. So this is sort of an addendum to MVRV, which we've recently made as a standalone metric. I'm not sure if it's really available anywhere else. And the idea behind this metric is to try and visualize the overall daily ROI across all network transactions. So what that means is that, first of all, let's talk about how network realized profit loss is calculated. So for each unit of the coin that moves on the blockchain, so you'll see some similarities between this and MVRV. For each unit of the coin that moves on the blockchain, we take the price at which it was last moved. Let's say we're looking at MLN right now, right? Let's say that a coin was last moved, or a unit of MLN was last moved here. And then we take the price at which it was last moved, and we assume that this was its acquisition price, right? That this was the price at which it was bought. And then the next time that same unit of MLN moves on the blockchain, let's say it moved here, we take the price at which it was then moved, and we assume this to be its sell price. So we take the difference between these two prices, or prices at these 2 points in time, and we combine them for all daily transactions. And as a result, the end result is basically this chart, which when there are spikes in this chart, it suggests that on average, all of the coins that are moving on the blockchain at this point in time are moving at significant profit relative to the last time they moved on the blockchain. So suggesting some elevated profit-taking capabilities or profit-taking activities. And then on the other hand, when we see these massive drop-offs in net profit loss, what it suggests is that on average, all of the coins that are moving on the blockchain at that point in time are moving at relative loss relative to the last time they moved on the blockchain. So the idea behind this metric is to figure out, sort of on a network-wide level, is to figure out at any point in time on a daily basis whether there are massive sort of profit-taking activities or possibly capitulation events where people are sort of dumping their bags for much less than they have acquired them for on average, suggesting that they are fudding out of the coin. Right? So one of the things that we have sort of noticed with this metric, especially when it comes to sort of low and mid cap altcoins, is basically what you see in the case of melon here, or enzyme, sorry, MLN. So what you see is essentially these major spikes in network profit loss around several of its local tops. You can see this massive spike here, 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 and then you also see here. Now you might think that this was actually at the bottom, but if you zoom in, notice that it's exactly before the drop. This major spike in MLN's network profit loss, suggesting that at this point in time, compared, like you can look at the last or previous 2 weeks, at this point in time, the average sort of on average, all of the coins that were moving at on the blockchain were moving at significant profit, suggesting that some MLN holders might have been looking to cash out, to take profits, to reduce their risk, mitigate their exposure, and as a result, apply negative or downward pressure on the price. So I'll show you a few more examples. Because one of the other things that I want to mention about this particular metric is that you don't necessarily only use it for spotting tops. Like, for example, if we look at OMG, right? So first of all, let's talk about the downsides for this metric or potential downsides for this metric. So I think the biggest drawback of this metric is that it assumes that all of the transactions on the blockchain are buys and sells, right? It basically doesn't really take into account any other possible use cases for this coin. So for example, you know, if I just sent a lot of OMG here to Brian, it would still show up as a sell on the network profit loss, right? Even though it's not really sort of contributing to any sort of increased sell side pressure, it's just a transaction between two private addresses, right? However, usually I think it's still, that's why number one, I think network profit loss is better tailored or better suited for coins that don't really have much utility outside of speculation, which is, let's face it, still a lot of coins, and Bitcoin, of course, you know, as being the sort of means of payment first and foremost. And then the second thing to keep in mind is that sometimes you will see spikes in network profit loss like here, which don't really seem to, well, first of all, they happen sort of not really during any sort of major price move. So it's just sort of along the way, a big transaction, a big spike in network profit loss, which isn't necessarily tied to any increased sell side pressure. In order for you to really figure out whether there is or not a connection between this spike and additional sell side pressure, what you can do is you can look at the top transactions for this particular point in time. We're not going to get into it now, but essentially that's what you can do. You can say, okay, on 6th of May, I want to look at all of the big transactions that have happened on the 6th of May for OMG. And then you can sort of figure out what are the biggest culprits for this spike in network profit loss, and it's probably these few transactions that occurred like in a span of a couple of minutes, and you can figure out whether they are indeed pointing to an increase in sell side pressure. This one probably seems to or suggests that, at least according to the first few transactions, it probably is increased sell side pressure because it's a lot of OMG being moved from private addresses, or at least addresses that we don't have labeled as belonging to exchanges, to addresses that we do have labeled as belonging to exchanges. So in either case, that's why I want to make some sort of caveats when it comes to talking about this metric, because it does assume that all transactions on the blockchain are speculative in nature. That being said, I still find it that very often, especially during sort of these massive price upticks, when you see spikes in net profit loss, it does seem to be, or tend to suggest that there's increased profit taking and increased sell side pressure. So for OMG here, we can see spikes here, 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 around several of its sort of local tops, as well as sort of a cluster of network profit loss spikes before an imminent correction here, right? So that's sort of one thing that I also wanted to mention. Now, on the other hand, sometimes we also use network profit loss as a gauge of potential price recovery. So on the one hand, when you see these massive spikes in net profit loss, like I said, what they seem to suggest is that a lot of people are taking profits. Like they're finally starting to move their bags that they have probably acquired like here, or even earlier at very low prices, and they're moving them on the blockchain. Therefore, taking the profits and getting out of town. However, we are also sometimes seeing these major drop-offs in a coin's net profit loss around local bottoms. And to me, at least, this also makes a lot of sense, because essentially what it means is that at this point in time, on average, all of the coins that are moving on the blockchain are moving at relative or significant loss. So this would probably mean, especially when we look at OMG's price action over the last couple of months, it probably means that, holders that have acquired here are starting to already sort of exit the coin, abandon the coin, probably starting to panic sell because they are afraid of an even higher correction. Essentially, these major dips in net profit loss signal sort of a little bit of a blood on the streets. It signals a period where people are panic selling. They're more than happy to actually sell at a loss because they're afraid that an even larger correction is coming. And as a result, it suggests oversold conditions, right? It's not always going to be this way. However, I'll show a few examples where it does seem to sort of visualize or seem to illustrate that this idea of dips in net profit loss sometimes coinciding with local corrections, especially when they happen during these massive price drops, right? So we can see it here, we can see it here, we can even see it here before this sort of beginning of the rally for OMG. I also have a few other examples prepared. I think basic attention token is one of them if we look at the last 6 months. Right, so we had for basic attention token, we see a few sort of good examples. So we see it here, here, and here, all sort of massive spikes in net profit loss coinciding with its price rally. This one, I probably would assume that it's not connected to any sort of elevated sell side pressure, because as you can see, it's sort of just along the way. It's not connected, I would assume, to its price action, or it is, but it's still not being absorbed by the market. In either case, I also wanted to show this, like if we zoom out to the last 6 months, this massive drop, the biggest sort of drop in basic attention tokens net profit loss, right around its April, or what is this, like right around like a 30-day low, right? Suggesting that probably a lot of holders that have acquired during this sort of bull rally for basic attention token are now exiting the coin in droves. They're selling at a loss. They're capitulating from the market, and expecting that the BET is going to dump even lower. As a result, especially if there's enough buy side pressure or buy the dip pressure at these points in time, we often see, or sometimes see, a potential for price recovery when the coin's net profit loss dips like this. I have another example to show. Let's look at, I have a few of them. Maybe MKR is a good one. Okay. I mean, first of all, right, if you're looking for sort of a very clear-cut example of how net profit loss can sometimes be used, I mean, yeah, if you see this type of sort of uptick in a coin's price and then this massive of a spike in net profit loss, obviously go back and look into exchange inflow, look into top transactions to kind of confirm that this is indeed connected to increased sell side pressure. But it's at the very least sort of notable to keep an eye on the price action moving forward. Now, I do want to zoom into this particular stretch here. Right, because what we see here is we see several spikes in MKR's net profit here, as the coin started to correct, suggesting that people are starting to take profit, and then boom, we see a major drop in Maker's net profit loss. I think it's like a 6-month low or something at its local bottom, suggesting that people and holders that have probably acquired at all of these levels higher than this point in time are now, because this was, I think, an all-time high for Maker anyway at this point in time, right? So they are selling at a loss. Everybody that has, or not everybody, but a lot of holders that have acquired at these high price points are already sort of being scared out of the market. And when weak hands are scared, if you believe that there's enough sort of potential for price recovery, it can be an interesting time to accumulate into that coin, right? So maybe one final example, looking at Litecoin. Let's take a look at the last 6 months. Same thing. So a few sort of big spikes in net profit loss around local tops, like here, here, and here, and here, right yesterday, right before Litecoin started to correct. However, we've also seen several dips earmarking local bottoms. We've seen it right here. We've seen once again here. We've seen another sort of cluster of net profit loss dips around this sort of period of price recovery for Litecoin. So like I said, it's not always going to be as sort of evident. However, every now and again, especially when you see these massive spikes coinciding with price rallies, it does seem to sort of indicate that people are starting to take profit. And when you see these massive drop-offs, it does seem to indicate that people are capitulating or getting the heck out of town because they're expecting even worse market conditions. And if you believe that the market has a potential for bounce back, it can be an interesting time to accumulate into that coin because it suggests that the coin is being oversold. All right. I believe that we should probably end it there. We are already an hour in. The last point of business, as I mentioned the last couple of times, if you have enjoyed or found this type of analysis insightful, for the next 9 days now, I believe, we are still running a discount code, Sand Spring Fling. Max is going to flash it on the screen now. 40% off your first billing cycle for Sandbase Pro. All of the metrics that we have talked about today, that we have talked about yesterday, and that we've talked about 2 days ago, and all of the metrics that we're going to be discussing tomorrow on our weekly market overview, which you don't want to miss, are available for just $49 a month for the first month. However, with this discount code, you get the first billing cycle, whether that's a monthly or a yearly plan, for 40% off. So I think that kind of makes it a no-brainer for people that really want to keep an eye on the on-chain and social and development activity of a variety of different coins. Before I end, I do want to make sure that I let people know that you can use all of these metrics within our screener as well. So I talked about yesterday how I have a Kraken account, and sometimes I use this Kraken screener or watch list that I've created in order to figure out where some of the coins are according to our metrics. So for example, these are a bunch of different coins that I sometimes like to look at on Kraken. One of the things that you can sort of gauge is you type in 30-day MVRV, or actually you can just type in MVRV here, and we add MVRV as a column for this list of coins. And then what you can do is you can actually rank the coins by its 30, 180, 365 day MVRV, whatever you want. You can rank the coins by from highest to lowest, or from lowest to highest MVRV. So for example, right now we can see that out of all the coins that I'm kind of sometimes looking at on Kraken, Storage has the lowest 30-day MVRV, suggesting that its holders, short-term holders, are in quite a bit of pain, minus 11.4% on average on their initial investment. So if I were probably then to look into Storage, I would look into a bunch of other metrics to figure out whether Storage might be a potential sort of, whether it might have an entry opportunity for me at this point in time. And then on the other hand, if I'm maybe invested in a few of these coins whose MVRV is very high, I would look at these coins, I would figure out whether their current MVRV, how it fares against its historical values. If it's very high, I would maybe consider reducing my exposure for the time being, right? So it's very outside of just checking for MVRV ratio for specific coins on project pages, you can also create your own watch list and then filter out coins by metrics like MVRV. So that's going to do it for me. I hope you guys found this useful and found it insightful. Brian, anything that you want to add before we end it?
No, you've covered pretty much everything. Just want to remind everyone about the referral links as well. You can go to your account settings, click create referral link, and you can instantly have a shareable link that will generate 25 to 35% of any membership payment that comes in from someone who uses your link. So tell your friends and family about it. We pay pretty much instantly, and we love to share our monetary gain from anyone who joins our company with anyone who helps us grow. So consider that a way of us wanting to give back and work with anyone here on this call to help us grow. So thank you all for coming on and checking out our webinar today. We hope to see you all tomorrow as well for our This Week in Crypto call, and we'll talk to you all very soon. Much appreciated.
Yeah, thank you guys. These three webinars were sort of general in terms of what we talked about. We didn't really touch much on what's going on the market and in the market right now. We're going to be talking about the market as it is right now tomorrow. Tomorrow, 4 p.m. Central Eastern Time, our usual weekly call, weekly stream. If you have any sort of specific assets that you want us to look into, talk about, do some impromptu on-chain and social analysis, join us tomorrow. Same place, different time, 4 p.m. Central Eastern Time. We're going to be talking about Bitcoin and Ethereum and a lot of other coins that you might want us to look into. So talk to you guys tomorrow. Until then, check out our Discord. The link is in the description of this video. Let's move our discussions over there in the meantime. Thanks, everyone.
Thanks, everyone. Thanks, Dino. Bye-bye.